Over the past 3 years, it's no secret that GameStop stock has been all over the place as it's one of the most hotly discussed stocks in the market. Now that they've completed their recent split dividend, what does that mean for the stock going forward? In this video, we're going to run a brief valuation of GameStop stock using hard numbers on the financials. Welcome back to the Hourglass Trader, where as time passes, we make money. So as we just mentioned, there are a lot of different ways you could potentially look at the valuation of a stock. I know there's a conversation for GameStop about a different short squeeze thesis, but in this video, we're just going to look at the hard numbers behind the financial statements and use this exercise to value the GameStop stock. And even if you're not interested in GameStop, this valuation exercise applies to all sorts of different stocks in the market, so it's a useful exercise to use anytime you're considering a potential investment. So off the bat, we're going to need three main pieces of information. We're going to want the current price of GameStop, we're going to want the earnings, and then we're also going to want the market cap. So to find the earnings, we're going to want to take a look at GameStop's financials, and anyone can view publicly traded stock financial statements. So what you're going to want to do is go to Google, type in SEC Edgar, which I misspelled a couple times there, and go to the very first result, sec.gov, the company search page. And you're going to type in GameStop, GME, the ticker, it pops up right there, and you're going to click on it. Now, when you get to this page, there's all sorts of different filings, right? You've got the 8K, S8, ownership disclosures, proxies, etc. But what we're focused on are the 10K and the 10Q, which are the annual and quarterly reports. And for the purpose of this valuation, we're going to want their most recent annual report. So we're looking at an entire year. So we're going to click on the 10K right here. And there you have it. You always want to double check the date. This is the fiscal year ended in January 29, 2022. So this is going to be for 2021 data. So to find the financial statements, there's going to be a ton of different stuff in here, but you're going to want to go down to the table of contents, click on exhibits and financial statements schedule, index to consolidated financial statements, and finally the consolidated statement of operations, which is their income statement. And there you have it. And whenever a publicly traded company reports financials, it's a requirement that for the income statement, they report 3 comparable periods. So anytime you're looking at an income statement on this website, you are going to find 3 different periods full of information, which is good from a growth perspective if you want to see how the most recent period compares to the prior 2. But with that said, we walk down from net sales to net loss, and this is the number that we're worried about, right? We wanted to get an idea of what their earnings are, so let's take a look at that right now. It's 381.3, but it's a negative 381.3, so it's a loss. And then the other thing we really want to pay attention to when we're looking at financial statements is the unit that things are being presented in. So this right here is being presented in millions, meaning that GameStop over the past fiscal year in 2021 lost $381.3 million. So let's type that in right here, negative 381.3, and then have an M right there to denote millions. Now, the next thing we want to figure out for this valuation size is going to be the market cap of GameStop. And that easily can be found again by going to Google, searching for the GameStop stock, going down, and there you have it, a $10.9 billion market cap for GameStop. So we're going to throw that in, 10.9 with a B to denote billions. And to run a little math right here, we're going to open this up so we can calculate these with the hard numbers. Now, as you can see by what's in column E, we're going to be calculating the PE ratio, or the price to earnings ratio. This is a very, very common way of valuing stock, and it is a simple calculation of just taking the price of the stock or the market cap and dividing it by the earnings. Now, if we do that exercise right here, we take the price of the stock, aka the market cap, divided by earnings, we're going to see that GameStop has a negative 28.59 PE ratio. And Google will tell us that the average PE ratio in the S&P 500 is 15.97. So 15.97 is a long way away from negative 28.59, which would suggest off the bat that GameStop is pretty overvalued. But let's finish out this price to earnings exercise and maybe figure out what their earnings would need to be in order to get to that average PE ratio of 16. So if their PE ratio were to be 16 at this 10.9 billion market cap, we would divide that 10.9 billion market cap divided by the 16 PE ratio to find out that I have this wrong here, and this is earnings, but that needs $681,250,000 in necessary earnings to justify that average PE ratio of 16 in the S&P 500. And you might say, okay, I think GameStop is going to turn it around. I think they're going to execute on their strategy. This is 2021 data. So it's probably going to be a little bit better in 2022, but thankfully, we already have a quarter of financial information for 2022, so let's take a look at it. And again, we're going to follow the same process. We want to double check the date, that this is the quarterly period ending April 30th, 2022. Scroll down, we're going to go to the financial statements. Now it says that they're unaudited, but all quarterly financials are unaudited and they're quote unquote reviewed by the company's auditor. So just because it says unaudited doesn't mean that we can't use this information for our analysis. But this one right here, you see the consolidated statement of operations again right there. And there you have it. You have net sales that walks down to net loss. And the net loss is negative 157.9. We again remember that that's going to be in millions. So that's $157.9 million loss. And you might say, okay, that's a little bit better. But what you also want to pay attention to is that this is just for the 3 months ended April 30th, 2022. This is just Q1, whereas what we were looking on the annual financial statements were the entirety of 2021. So if we wanted to kind of run rate this number, the negative 157.9 million, times 4 for 4 quarters in a year, it run rates out to $631.6 million loss over the course of the year. And again, we'll remember that in order to justify a 16 PE ratio, GameStop needs 681 million in earnings, positive 681 million. So, being on track for a $631.6 million loss in 2022 means that they're about $1.2 billion away from being where they need to be to match the average PE ratio in the S&P 500. And you may also make the argument that, hey, 16, the S&P 500 is a bucket of stocks that includes all sorts of different industries, and you'd be 100% right. And maybe something that GameStop focuses in might have a higher PE ratio, but that really doesn't even come close to bridging the gap. Even if we plugged 25 in here or something, it doesn't really come close to bridging the gap between their projected $600-ish million loss and their necessary $436 million of earnings to get to that PE ratio. All that to say, it is typically a tough valuation exercise when a company has negative earnings and you try to use a PE ratio. So we could take another approach, which is if we look back at GameStop's financials for the year, they have positive net sales, and looking at a price to sales ratio may make a little bit more sense since this is a positive number. It's not necessarily apples to apples for a company with negative earnings. So let's move through that exercise as well and talk about the price sales evaluation of GameStop. So as you can see right here, we're going to run through a very similar exercise. We're going to want the GameStop revenue, which if we go right back to those financials, it's going to be about $6 billion in revenue. You can see on the top line right there, 6,000 in millions is 6 billion. So we're going to type that in, 6 billion. That gets pulled out to the right for some math. And then we want the GameStop market cap as well, which we could link to up here. That's 10.9 billion. So the price to sales multiple, the price, meaning the market cap, dividing by the sales, meaning the revenue, is 1.82 for GameStop. So now that we have that number, what do we compare that to get an idea of whether or not that's reasonable? And one really good way to evaluate this is to look at competitors in the industry, similar companies. And one really simple way to get there is just to go to Google and type in GameStop Competitors, and you're going to see companies like Walmart, Target, Best Buy, and Amazon. Let's just pick one from the middle of the list. Let's go with Target. So back to our spreadsheet, we're going to want the same two things from Target so we could calculate a similar price to sales multiple and then compare the two to see where that would peg the GameStop stock price. So same process as before, we're going to go SEC Edgar to go find our company search page. Go to the company search page, ticker TGT for Target. It's going to come up right there. And we are going to want the most recent 10K again, which we can get by navigating to 10K and 10Q, annual and quarterly reports, and clicking it right there. So voila, here we have it. Again, we want to double check that date. It's the fiscal year ended January 29th, 2022. We go back to those GameStop financials, same exact period. So we're looking at comparable financial periods. We're going to want to scroll down to the table of contents, the exhibits, financial statements, schedules, consolidated statement of operations right at the top right there. And there we go. We are already to Target's most recently published and filed income statement. All right, and again, we can see it's very similarly laid out to what we saw with GameStop. It has sales and it walks down to net earnings. We're not too concerned about earnings. These are positive, and it wouldn't really necessarily be fair to compare those to negative GameStop earnings. So what we're going to use is the sales information for the price to sales ratio. And as you can see in the most recent financial period, 2021, 104,611. And again, these are in millions, meaning that it's 104,000, meaning 104 billion in sales for Target. So let's type that in right here, 104.6, and that's going to be billion. That's going to pull out to the right. And now we want the Target market cap, which if we go TGT stock, on Google, we'll find that it's 73.14 billion. 73.14, and we'll finish the exercise by dividing price, the market cap, over sales, the revenue, giving you a 0.70 price to sales multiple, suggesting that GameStop is over twice as overvalued as Target is right now based off of comparable sales. And you may make the argument here that, okay, well, GameStop is a growing company. I think GameStop is going to grow a bunch. Target they are what they are. They're not positioned to grow as much as GameStop. So maybe that justifies this large of a valuation. And to kind of sense check that, let's go back to the GameStop financials really quickly. We're back at the top here. So let's navigate to the income statement again by going exhibits, consolidated financial statements, and statement of operations. You could try to potentially make the argument that you think GameStop is a growing company. They have shrunk their net loss from 470 million down to 381 million. However, the issue here is that the revenue from 2019 to 2021 is actually decreased. And it did increase from 2020 to 2021, but over a 2-year period, they're still not back at peak sales. So I'm not really sure I see the argument behind GameStop being a growth company that would justify that big of a difference in price to sales ratio. So the way that we want to finish out this exercise is saying, okay, if GameStop had a 0.70 price to sales multiple and we're comparable to something in the industry like a Target, then what would that put the GameStop stock price at? Which is really the one piece of information that we're trying to get back to with all of this analysis. So let's go down here and let's add a couple more rows in. So the question here is, what would GameStop's market cap need to be in order to have a 0.7 PS multiple? So we'll call this the adjusted market cap. And the answer is we're going to take that 6 million in GameStop revenue. We're going to multiply that by the price to sales ratio. And it tells us that the adjusted market cap would be about 4.2 billion for GameStop. And the issue with that is that 4.2 billion compared to the current 10.9 is about 38.49% of the current market cap, meaning that if we use this price sales exercise to value GameStop stock, the fair value of that stock would be 38.49% of the current price. So if we called this the hypothetical GameStop stock price, it would be the current price of 35.78 times that 38.49% to give you a hypothetical GameStop stock price of 13.77, which is about 62% of downside from here. And quite honestly, based off of these two quick exercises that we've done, the PE ratio, where they're very, very far away from being where they need to be to have, not just the 16 average in the S&P 500, but even a more favorable 25. They're very far away from that. They're on track for an over $600 million loss in 2022. The price earnings analysis suggests that they're very overvalued. The price sales analysis suggests that they're also very overvalued. So it's a pretty steep drop off for their hypothetical price of 13.77. And you might say, hold on, HT. Yes, it's not favorable when you compare price sales to Target. But let's go back to that Google search we had with GameStop competitors. We also had Walmart, Best Buy, and Amazon listed. I think it's a little bit of a stretch to compare GameStop to Amazon just because Amazon has a hand in literally everything while GameStop's focus is a little more targeted. So I think Walmart is potentially a better company to look at. So let's run through the exercise again, getting these same two pieces of information from Walmart to calculate the price sales ratio, and then again come up with the hypothetical GameStop price based off of that ratio. So we're going to do the same process as before. We're going to get SEC. We're going to type in Edgar, company search page, and I've already done this a couple times, so I'm going to speed through this for purposes of the video. So hopefully you guys have the hang of this by now. But again, 10K, the most recent annual report. We're going to double check the date at the top, ended January 31, 2022. Fantastic. We're going to scroll down to the table of contents. We're going to look for the exhibits and the financial schedules. And this is actually a really good quick lesson here because it's not always going to be right at the top. However, it is right here. We just need to scroll down a little bit below the audit letter. And there you go, consolidated statements of income for 2022, the most recent year. And since their period end is January 31st, technically what they're going to be looking at for the most recent year is going to be called 2022 just because it's 1 month after the typical year end of December. But with that said, this is the most recent yearly period. This is what we want to look at for a comparable valuation exercise. And we'll see here that total revenues are 572,754. These are again in millions, meaning it's 572.8 billion in revenue. So 572.8 billion in revenue. We'll pull that in right there. And then we need the market cap as well to finish out the exercise. We're going to Google WMT stock. And there you go, 362.41 billion. And we'll type that in, 362.41 billion, to give you a very similar price to sales ratio of 0.63, which is actually lower than targets. And I think this is a good example of how price sales ratios are a very good valuation tool, because in general, a lot of similar industries will fall into line where you see Target's and Walmart's price sales ratio are very comparable. The issue here though is that it's lower than 0.7, right? So if we actually adjust our formula here, to multiply this by the new price sales ratio on row 28, this 0.63, you get a 34.83% chunk of GameStop stock for our hypothetical stock price, which takes it down to 12.46. All of this just to say, I understand and I acknowledge at the beginning of the video, there's a separate short squeeze thesis, but if you're going through a typical stock valuation exercise with GameStop using the one truth in the market, right? There's all sorts of different theories out there. The one truth in the market is company earnings. And if we actually go through that valuation exercise, looking at the hard numbers on the financial statements, it's really not a great outlook for the GameStop stock price. And I think inevitably sitting at the current stock price of $35.78, yes, there may be a small squeeze or two in the meantime, but it's one of those things where I think in the long term, it's destined to fall down to a more normalized stock price around this level, if it even continues at all, because we saw that those losses were expanding year over year. Unless they turn profitable, they're going to have a very hard time being a viable long-term company. And for that reason, I'm staying away from GameStop, and I think it's a valuation disaster. And again, this is just a GameStop analysis. These strategies and techniques that we're using to value the stock here are applicable to all sorts of different stocks in the market. So if you're not interested in GameStop, feel free to use these techniques and apply them to your own individual investment theses, because it's a great way to have an idea of what the true value is behind something that you're investing in. If you've made it all the way to the end of the video, thank you so much for watching. Come follow us, subscribe to the channel if you haven't, like the video, leave us a comment to let us know you watched, and maybe if you don't agree, feel free to let us know as well. We're always happy to have a little constructive conversation in the comments. If you want to join our Discord server, see what else we got going on, hourglass-trader.com. Everything we've got is over there. But until next time, this has been the Hourglass Trader, where as time passes, we make money.